basically, I was going to say, in developing a strategy, what tools would you refer to and back test with to help you create the perfect strategy?
Okay. So there's two parts to a strategy when you're trading. There's the technical side. So things like MACD, Bollinger Bands. That was another good one. That's just purely looking back over history and comparing a price of whatever it is you're interested in, comparing how that price actually moved in relation to those technical indicators. And if you looked over time, you would start to get a feel for it. So, I mean, I can remember I used to, when I was trading part-time, I'd actually have a couple of charts going in the background, even when I didn't have positions open. I'd have the chart with, for instance, MACD, and you'd be watching it all day. You'd just be keeping an eye on it. Because what that did, it kind of gave you a sixth sense. So you started to be able to, it was almost subconscious, you'd be able to see, if you looked historically, you'd be able to see that, okay, I think I might have seen this before, and I think I know what might happen in the future. So the technical side of it is just watch charts till you get a feel for whatever given technical indicator you want to use, and then look back over time and see if you think, by looking at the pattern and what's been going on over a period of time, days, weeks, maybe even months, if you can see something that is indicating to you, even if it's a hunch, that something's about to happen, sometimes it's worth trading on a hunch. The other side to it is obviously news. And again, it's a similar thing. It's when you're coming up with a strategy, when you've got certain news events that are coming up, look back when that's happened before. When say it's a quarterly announcement, have a look at what happened when that announcement, maybe the last few times that announcement came out, and see how prices reacted according to what the announcement was. And that's basically it.
How much are you leveraged up at any one point?
Regarding leverage, I never used to think about the underlying value of what I was holding with regards to leverage. What I would think about was the value I was either making or losing money in relation to my trading pot, if you like. The underlying value of what I had was kind of irrelevant. It was about where my trade was going. And I would usually, as a rule, if my trade had either made or lost more than 25% of my trading pot, I would get out. Now, obviously, there were times when I didn't do that. Sometimes that was a good decision. Sometimes it was a bad decision. But it's very easy to sit on a loss and wipe out your whole budget. I never did that, but I know a lot of people who did. So 25–30%, if you're in a trade and it's going wrong and you've lost 25 to 30% of your trading budget, you should just get out.
Yes. Do you use stop losses? And if so, do you use guaranteed stop losses?
Yes, I've used guaranteed stop losses in the past. What I personally prefer is, because I could trust myself these days, when I trade, or when I used to trade, I would use my own manual stop losses. As long as I knew I was going to be around and be in touch and online throughout the life of the trade, I'd usually use my own stop losses as opposed to an automated one.
How much on average do you make from SBing a month, if you don't mind being asked?
So when I used to trade, so I suppose as a part-timer, I wasn't making a huge amount. So I'd probably make about a couple of £1,000 a month on a good month. The guys who I work with, who are running the news desk, who used to be full-time traders, they'd say a reasonable income for a retail trader is around the sort of 40-50k a year. That's a reasonable income.